a lot of corporations are looking at how to deploy tablets in a very strategic manner. So we're seeing a lot of demand for tablets out there as well.
And what kind of challenges does that present to Tangoe?
Well, it's actually an opportunity for Tangoe. We are in the business of helping large companies manage these, many of these devices. The average device life is approximately 15 months. So in an employee base of 10, 20, 30, 50,000 for our large customers, the turnover and the deployment of these devices itself is a big challenge. Just the fact that they could get lost, the billing on these devices and the expenses. And Tangoe is in the business of providing technology to our large customers to help them manage these assets and expenses. So that's an opportunity for us. Our technology helps our customers save quite a bit of money. The return on investment on our technology is anywhere from 3 to 10 times in the first year, and very often the same amount every year thereafter. As a result of that, Tangoe has performed extremely well in good times and in tougher times. Through the sort of deep part of the recession in '08 and in '09, we grew organically very successfully through that period. So tougher markets don't make us nervous with how Tangoe will perform.
And one of the largest things that the proceeds of the IPO had been intended to go towards was paying down debt.
Correct.
What else did you use those proceeds for specifically?
Well, again, we strengthened our balance sheet. The primary expense we had was to pay down debt. The rest is on our balance sheet. And mainly the three major reasons why we thought strengthening the balance sheet through going public made sense. One was to pay down debt. The other was to support our M&A strategy, mergers and acquisitions. We've done 5 very successful deals in the last 4 years, and we've made it pretty clear that we'll continue to complement our organic growth with strategic M&A, and obviously having our own financial ability to do that makes an awful lot of sense. And the last reason was visibility. We do business with very large global corporations, and they're very comfortable doing business with a public company with a strong balance sheet, and that's helped.
Now, revenues of Tangoe have consistently gone up. They've kept going up, kept going up, kept going up. But the losses, when are you guys going to turn profitable?
Well,
question.
It's a very good question. We measure our business on something we call adjusted EBITDA. And adjusted EBITDA, we are positive, and that's very reflective of our cash flow. And our cash flow has been positive for many, many quarters, and our adjusted EBITDA has been expanding pretty dramatically in the last couple of years, and we continue to expect expansion in both adjusted EBITDA and our free cash flow. Obviously, below that line, there are certain elements in our accounting that bring the loss at the bottom. But obviously, we look at adjusted EBITDA and feel very good about the expansion in that.
And are you concerned about investor detachment if the company continues not to turn a profit?
We're not concerned. We think people that understand technology, the technology marketplace, they look at the growth of the business, they look at our free cash flow, they look at the expansion in the adjusted EBITDA and our performance in general, and you look at the long term of Tangoe, we feel very good about building a very, very successful and profitable corporation that really generates cash.
And the last question is, when would you say that point is when you do turn profitable? Do you have an estimate on that? We
don't. We're not providing that forward-looking guidance. What we did do is we announced our second quarter not long ago, since we went public, and we exceeded all of our internal estimates at every metric. We also took up our estimates to the street for the third quarter and for 2011. So we feel very good about the performance of the business.